Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you some important updates about the economy and the investment market so you can understand what we see in the global landscape. I like to do these update videos approximately every other week, and one of the things we've seen in the last week or so is a little bit more volatility. Again, this is to be expected. U.S. economy, generally speaking, is in a nice uptrend. I look at our market trend indicators, they're in a positive territory. But we were expecting a little bit of a pullback after the recent run. We're actually getting ready to deploy new capital for additional funds for various clients. One of the things I do want to stress is this. The U.S. economy is doing well. We could definitely do much better if we had better politicians in Washington and actually had pro-growth policy. But remember, the dysfunction of our government's been from the test of time. It's really been since the beginning of the United States. Politicians tend to be politicians and they're not business people. Our economy could be doing better, but it's doing pretty darn well and things are growing. Oil prices should help the second half of the year in GDP growth. I still anticipate full year 2.5% on GDP. One of the things that we are seeing is that bottoming effect right now in interest rates. In fact, we're seeing kind of this triple bottom pattern. What that means is it appears that interest rates have stopped going down and we're going to start resuming the uptrend in interest rates. This is going to hurt longer-term bond investors and intermediate-term bond investors. Again, whether you own treasuries, corporate bonds, high-yield bonds, muni bonds. Again, if you're anything more than a 3-year maturity, this is the time, of course, you want to be repositioned. I can tell you our clients at our firm are in floating rate securities or bonds, and also aggregate bonds. We're trying to keep the average maturity under 3 years, and that's really where we're at this point. So more of that safety net. Don't run for the outstretched yield, trying to go for the longer term maturities. It's only going to hurt you negatively in your total return because of loss of actual principal. Now is the time to lock in long-term bond profits if you haven't done so already. And I've talked about this since the beginning of the year, and we've been spot on where interest rates have been. I firmly believe rates will move up very slow, but again, if you've got profits in some of your bonds and you're not a client, it's time to start repositioning that portfolio. The world economy outside the U.S. is doing pretty decent. Europe's fiscal stimulus seems to be getting a little bit of hold. Not great, but better than they were doing. Emerging markets are doing decent. And again, the GDP there is growing about 4 to 6%. So overall, the world's growing. I see a decent year in the overall equity markets for 2015. And we do not see any recessionary indicators currently in sight. We watch these daily, and we will be repositioning our client portfolios if necessary. But right now, we see a nice trend up, and we're going to stay fully invested and capture any potential profits there are. If you're a client of our firm, give our office a call. If you're not a client or you're thinking about becoming a client, give our office a call. You'll be glad you did. Big difference in service, big difference in management. We really appreciate your business and make sure you have yourself a safe and profitable day.